You're tuning in to the Investors of Change with your hosts Riz Fizz and the Big Lebowski. For more insights on content similar to this video, feel free to subscribe on YouTube or follow on Twitter. The views on this video are opinions shared and not investment advice. Remember to do your own due diligence.
Hello, everybody. This is Adam at RizFizz and Jacob at the Big Lebowski, coming your way with a freshly brewed new episode of the critically acclaimed series of ours we like to entitle Coffee and Food. Coffee because we invite a guest inside for a chat and a cup of coffee, and food because we talk about the food space from an investment point of view. Up until now, we have only been doing content on Canadian-based Goodfood, but today we are broadening our horizon within the food space and bringing in a guest where we will be taking a deep dive into the HelloFresh Group, which trades under the ticker HFG at the exchange in Frankfurt and has actually recently been inserted into the DAX 40. So, Adam, speaking of food and the HelloFresh Group, how much have the two of us been looking forward to recording this episode today with our guests?
Yeah, we've been really excited and chatting about this for a while. It's been a while since we've made a video together, and there hasn't been that much new news out on Goodfood. So I'm really excited to dive into something new. I'm a beginner for sure when it comes to HelloFresh, and really looking forward to learning more from our guest.
Great, Adam. And would you go ahead and introduce our guest today?
Yeah, sure. So today we have George, who's in Spain. George, welcome to the show.
Hi, Adam. Hi, Jacob.
Hi, George.
So many thanks for having me and inviting me to the podcast. And yeah, it's wanted to also thank you for the amazing job that you guys have been doing around Goodfood for the time being. Very useful for investors or anyone interested in learning more about the business, especially for those which are not based in Canada, right? Because they don't have the possibility to try the service and the product. So, it's definitely worth taking a look to your pockets.
Great, George. And so as we talked about before, we call this bit Coffee and Food. And that is because we invite a guest for a loose talk about the company in focus and while we're having a drink or a cup of coffee. And Adam, what are you having? If we start with you, what are you drinking this evening?
Yeah, today I'm actually having a latte. I planned on having it with regular milk, but Goodfood was actually all out of milk. They're out of stock, unfortunately. So I ended up ordering, they have they call it oat beverage. I don't know if it's the same as oat milk, but I have a latte here made with some Goodfood oat beverage, and it's really nice. It's a single roast from Colombia. It says that it has hints of peanut butter in it, which is pretty nice.
Oh, nice. And if I continue with myself, this is late in the evening, so I took a less toasted bean here. I took a bean called here from an area in Mexico called Cinco de Julio, I think the name is, and it's from the southern of Mexico. So this must bring back memories for you, George, when you were recently visiting Mexico. And it's from my local roastery, as previously Nørre Snede Kafferisteri. And this one has hint of chocolate, and it's really good in the evening time. And back to you, George. What are you having this evening?
So I love coffee as well, Adam, but unfortunately it's too late here in Spain to have a cup of coffee. So I'm having a glass of red wine, if you guys don't mind.
Oh, that sounds lovely.
Great.
And George, for our listeners and our viewers, could you give a short introduction to yourself, your professional role, and how you came across the HelloFresh Group?
Yeah, so basically I work as an investment analyst for a global equity fund based here in Madrid, in Spain. And yeah, we kind of have a bias towards, let's say, quality companies, so business models that, let's say, they can build and sustain a competitive advantage through long periods of time while growing at, let's say, at least double-digit growth. So let's say to make it short, good companies, right? So basically, I came across HelloFresh because one of the investors that we are friends with, he recommended me to take a look to Goodfood. And of course, if you research Goodfood, you'll research HelloFresh as well. First, because it's the global leader in the meal kit industry, and second, because it's the largest competitor in Canada. So that's how I found about HelloFresh.
Awesome. Yeah. Thanks, George. It's really great to get your background and kind of how you came across the case. A lot of our listeners are probably familiar with Goodfood, and they've probably heard of HelloFresh, but they might not have done a deep dive. So let's start off by asking kind of what is HelloFresh, where are they operating, and kind of what are their large markets?
Yeah, so HelloFresh, as I said, it's a German-based meal kit company. Okay, so it's a global leader in the meal kit industry. They have more than 7 million active customers. They operate in 15 countries right now. Last one they did add was Norway, and basically they have again more than 7 million active customers. Half of those are based in the US, and the other half in the international markets, being Germany the largest, the second largest market, right? So I think it's a very interesting case because for the time being, investors have been putting a lot of effort and research on online groceries, but in my view, meal kit industry as a whole, and especially HelloFresh, and you could argue that from the point of view of Goodfood as well, they have not taken all the attention, right? And I believe they're very, very interesting business models. They're growing fast and profitable, which is something that it's not easy to see in online groceries, as you know. So that's pretty much it. I think it's definitely a very interesting company from that point of view.
And George, coming back to your introduction regarding the HelloFresh Group, you said something that's quite interesting, which we also heard another previous of our guests, the Dizzy at the local butcher, talk about regarding the meal kit industry and the food industry not having grabbed the attention of investors. I think you used the word attention. How do you think that is the case when you're looking at a case like HelloFresh Group? Why hasn't it caught the broad attention from an investment point of view?
Yeah, so I think one of the main reasons that if you think about meal kits, it's a very, let's say, it's a very unique concept, right? It's something that it's not that common, right? It was first introduced like 10 years ago. So it's a concept that when you first take a look at it, you see that there's a lot of discounting in the business. So basically, when there's a new product that you have to introduce to the market, it's normal for you to attract customers with discounts, right? Because you need for them to try the product. Otherwise, they will not know what kind of service you're providing. So, of course, discounting a product is not something that investors like per se, right? It's definitely not a good trade. But if you put that in the context of meal kits, which is something that it's very unique and very new, it's something that makes all the sense, right? So basically, discounting is something that, let's say, spooked some of the investors, and they point out that it's something that they don't like, of course. The other point I would say is the churn rate, right? So if you think about most of the businesses that are taking the world right now are software businesses, right? And those businesses are based on a subscription revenue model in which the churn is probably close to zero, right? So you expect to see that kind of churn in every single subscription-based model, and this is not the case for HelloFresh, which has a retention rate of around 20% after a year, which is definitely low if you compare to any SaaS company, right? And one could think that this is a flaw in the model, but it has to do basically with the way that usage that subscribers use the service, right? Adam, you know that for sure, because you're a subscriber to Goodfood, and basically there's sometimes that you skip a week or you go on vacation and you just pause, put your order and cancel for 2 months, let's say. So it's not like a subscription that like a regular subscription, right? So high discounting, high churn, it's something that spook investors and get them a bit skeptical about the business model. And the other thing is that probably for investors based in the US, I would say they're still licking their wounds, right, on Blue Apron. I don't know if you guys remember what happened with Blue Apron, but
please go ahead. It would be interesting to hear more about exactly with the Blue Apron case.
Yeah, so the Blue Apron case, it's quite interesting because they were kind of the leading meal kit company in the US back in 2016 when they IPO'd. And here in the meal kit business, it's very, very important to think that you have to tackle two main levels, right? One is the operating level, right, in which you have to give a consistent customer experience, right? And the other is on the marketing side, in which you have to acquire the right customers at the right price. And what happened with Blue Apron is that they went on this customer acquisition spree in which they wanted to acquire the more customers as possible to put all the metrics, the operating metrics before the IPO. And that creates a huge complexity in the business model because first, you cannot digest all the demand that it's coming. And second, you're acquiring unprofitable customers. So basically the lifetime value that you will get out of the money that you're spending to acquire the customer is lower. So that means that you're basically burning cash, right? So that was one of the problems that happened with Blue Apron, and that it had an impact to the business and to the brand, right? So I guess the numbers, they went on an IPO at $2 billion valuation, and now they're trading on less than $100 million. So it's a 95 crash, right? So it's
that's a sting definitely from an investor's point of view.
Yeah, indeed. So if consider yourself as a US investor, probably you've invested in Blue Apron. If not, you've heard the case, and now someone comes and says, look, in this COVID world, there's a new company out of Germany that is gonna finally tackle the meal kit business. Would you like to invest? Well, probably you have something else to do, right?
Yeah, that's really interesting. Like just following the whole Blue Apron case. I remember hearing about Blue Apron 10 years ago as well. That's the first meal kit company that I had heard of. And also, I love what you say about the churn and kind of we expect such low churn nowadays. But HelloFresh, they're selling perishable products, right? If you're going away somewhere, you're not going to cancel your Netflix subscription probably, or your Apple subscription. But you don't want groceries getting sent to your house that are just going to sit on your doorstep and rot. So it makes sense that the churn is going to be a lot higher for this kind of product. And while we're talking about Blue Apron, about half of the customers I read of HelloFresh are in the US, which is where Blue Apron was operating. How do you think that HelloFresh succeeded there where Blue Apron failed? And what was kind of the key difference in the strategy that HelloFresh had?
Yeah, so basically, as I said, there are two levels of the business, right? The first one is to provide a consistent customer experience, okay, and that means, providing what you're saying you're going to provide. So basically, if you were saying that the box is going to be in your doorstep at 2 p.m. to actually make that happen, right? If you are saying that there's going to be 6 meals in that box, to have those 6 meals in the box. And maybe this sounds a bit trivial, but when you have 3 million customers that HelloFresh has in the US, and you're operating at scale, okay, because not the same as operating at the lower scale that the large scale, it's very, very important, right? Because if you fail to that customer, probably that customer is going to have a very bad experience. It's not going to have dinner that night, first of all. So it's a damage that it's hard to fix, right? So that's one, right? It's a very execution-driven business, and again, this is something that HelloFresh has mastered throughout the years and through different countries, right? In the beginning of our conversation, we said that HelloFresh is operating in 15 countries. And the most important fact is not that they're operating in such a large number of countries, but the fact that they're number one player in all 15 markets, right? And there's a reason of that happening with HelloFresh in every single country, right? And it's basically because of mastering execution. First, in the side of operations, which is the one that I described, and second, in terms of marketing, right? And marketing has to do with acquiring the right customers at the right price. And this is something that, again, HelloFresh has managed to excel at, right? And if you take a look to the comps and the companies like, even including Goodfood, you have Marlin Spoon and Blue Apron, as well as listed Mealkit companies. You can look and see the rate of growth in customer total number of customers, and the profitability of the business model, right? And in the case of HelloFresh, it's pretty amazing that they are growing at more than 45% year on year, and they're still delivering double-digit operating margins, while the other competitors are probably growing at a lower rate, and they're still break even, right? So that means that HelloFresh is not only acquiring the customers at a very high pace, but they're acquiring very profitable customers, right? So if you consider that two key points, which are delivering a consistent customer experience at scale, plus the fact that they are acquiring the right customers, it's kind of the recipe for success in the case of HelloFresh, which is, again, it's a very execution-driven business.
George, it's interesting to hear you talk about the level of execution on the HelloFresh side, on the management side, and how they execute across 15 markets. Being an investor in food, and personally, I'm not invested in the HelloFresh group, but find the business fascinating. But it's also at the same time scares me a little bit, because having been spread across 15 markets and having this business unit structure across each market, being Germany based and basically covering half of the sales across the globe, how do you view that in terms of an investment case? Also, not only operating from the HelloFresh Group brand, but having acquired these different brand names where you operate similar business models, but under a different name, umbrella, offering, and so on. And also, again, with respect for the different local offerings, it's just compared to, when you look at it compared to Canadian-based Goodfood, which is much more lean and simple to understand from the outside. What is your take on that? I don't know if you follow me on the complexity. Just gives me also a dimension to puzzle around.
No, yeah, I think I got your question. If you think about HelloFresh, what they're trying to do is trying to be a company that delivers meal solutions, right? So meal solutions is kind of a broader concept compared to just meal kits. Okay, so I guess that's where part of the confusion it's coming from. So as we said, HelloFresh started as a pure meal kit company. Okay, but if you think about it, it makes all the sense that you can instead of just focus on meal kits, which are very, very, they're trying to solve for the dinner time, right? So basically the most frequent user will use meal kits for dinner. You can think about HelloFresh as a meal solution company in which they're just moving from dinners to, let's say, lunch, breakfast, and snacks, right? So if once you put a box in the doorstep of, in the case of HelloFresh in the US, more than 3 million customers, I think it makes all the sense to then fill up that box with, let's say, some add-ons. Maybe you want some olive oil, or maybe you want, instead of solving for dinner, you want to solve for lunch as well. And now you can offer for them ready-to-eat meals, right? So I guess there are kind of these 3 legs to the business, which are the core HelloFresh, which is meal kits, the ready-to-eat meals, which started with the acquisition of Factor 75 in the US, which we can dig a bit further into it, but it has been, for the time being, a very big success, although there's not many data in the public markets. And on top of that, you have add-ons, which is what HelloFresh now calls as HelloFresh Market, which is, let's say, 500 SKUs, which can complement your meal kit or your basket, right? So I guess maybe part of the confusion can be, let's say, summarized as HelloFresh moving from a pure meal kit company to a meal solution company.
And as you talk about kind of their move into lunch, breakfast, and grocery, I remember following that they entered the grocery market, I think, as far as I know, only in the US as of now. And it was hard for me to tell exactly, like, are they selling their own private label items at all, or is it all with partners and they're selling things like Kraft Heinz products? Can you talk a little bit about the development of their grocery offerings, and if you have any like context on how that's doing?
Yeah, sure. So one of the good things of operating in 15 countries is that you can basically try some new concepts in one market and see if it works. If it works, probably it will work in the other 14 countries, right? So one of the things that they've done is they started with the Benelux region, which is Belgium, Netherlands, and Luxembourg. And they tried this, what they call, again, HelloFresh Market, right? Which is add-ons, if you will. So you have your meal kit delivery, and maybe you want to add milk to it, you want to add some snacks, and you want basically to complement your meal kit, right? So they tried that in the beginning of 2021, and it seems that it has been a success there. Of course, we know that, and what happens when you try that more aggressively because of the Goodfood experience, right? One of the things that happens is that the average order value goes up, and you're actually leveraging 2 main costs, which are, first of all, the marketing expense. You have already acquired a customer and you're selling more to that customer. And second, you're leveraging on your delivery costs, right? So it's very, very profitable, and these add-ons comes at a very high contribution margin to your P&L. So in the case of the US, again, as they realize that in a smaller scale add-ons work, they tried on Benelux, they decided to go and implement add-ons in the US as well. And for the time being, they're starting just with a very narrow range of SKUs that they're offering. It's a mix. I mean, you asked about whether it's a private label or branded label, but it's a mix. They're doing both, and I think it makes all the sense. It's something that they have to discover. Of course, some of the brands. I mean, the US is a huge market, as you know, right? So there are brands that are more important for instance, in the West Coast, and brands that are more important in the East Coast. So it's a process of discovery and basically understanding how the customers interact with the product and what they like. But I think it's definitely a very good idea, since average order value it's a very, very important metric for the business, and because of what I said on leveraging on marketing costs and delivery costs.
It's great that you mentioned that, like, because they are operating in so many markets, they're able to do tests in some of their smaller markets and see how that goes. And I would love for you to kind of talk about the founders that are still with the company, because I think they're quite young. I think they founded the company in their mid-20s, and they actually have a good amount of skin in the game as well. So can you give a little background and what you know of the management team and what you think of them?
Yeah, so that's true. I mean, I have only heard very good things about the founders, especially about Dominic, which is a very hands-on, execution-driven CEO. I know he was a semi-professional soccer player in Austria, which is interesting, and ended up doing an MBA at LSE, at the London School of Economics, and then spent a year off at Goldman Sachs before starting HelloFresh. So, very, very interesting and impressive career for his age. One of the things
just to jump in,
No.
Do you know if he was like 25 years old when they founded the company? Was he that young?
Yeah, I think so. Because if you think about it, he did his MBA. So you can finish the MBA, let's say at 28 years old, 27 years old. After that, he spent a year in Goldman Sachs before starting HelloFresh. So probably late 20s.
Really cool. And then I think that I read, they served their first meal kits in Germany, and then only a couple years, and they were actually like delivering all the meal kits at that time themselves. And then only two years later, they're like launching in like England and Netherlands and the US. They obviously have the ability to execute, and they have very large plans for the company. Can you give a little bit of context on how they think about strategy and expansion?
Yeah. So if you think about their expansion and how they managed to conquer those markets, it's actually very, very interesting, right? Because they've always been second player in the market, in the sense that they have not managed to gain market share by acquiring the main player, right? Of course, there are exceptions. For instance, in Canada, it was Goodfood, the main player. The second player was Chef Plate, and HelloFresh started there in the country, and suddenly they acquired Chef Plate. Okay. But this has not been the case for most of the countries in which they've come as a newcomer. And just by execution, again, what we've said, in this business is very, very important to tackle at the operating level and at the marketing side. If you manage to do that and build a business, you'll probably win, right? And that's been the case for HelloFresh in many, many countries. So I think that's definitely worth considering, right? The other thing that's important is the way that they decide how to enter a new country, right? So first of all, they look for countries with high income, right, per capita, which makes sense considering that Mealkit is kind of a premium product. Second thing that they look for is high e-commerce penetration, which makes sense because of course you're selling groceries online. And the third thing is, it's a bit counterintuitive, but as I said, they look for countries in which there's an already established player, right? So they do so because if there's an already established player, that player has already done the big part of the work to educate the population about what Mealkit is, right? In the beginning of the discussion, we were saying, look, Mealkit is a very new product. It's something that is not, mainstream, and you have to educate the population about what it's the service, how it works, etc. Right? So HelloFresh actually prefers someone to do that work for them, because of course they don't have to deploy that capital and invest in education for the customer, and probably save on marketing dollars. So yeah, that's kind of their playbook. And actually, it's if you think about, for instance, in Spain here, we don't have any Mealkit business, and of course we don't have HelloFresh, and it's precisely because if you think about those three metrics, well, high income, we're not precisely the richest country in Europe. There's not much e-commerce penetration, especially in online groceries, probably because of the culture as well, because I like to cook here and we do it well. And second, there's no player in Spain, right? So that's why HelloFresh has not entered yet. On top of that, probably the warm weather is not something that goes well with Mealkits, because you need to put more ice packs to maintain the food. But it's interesting the way that they're entering new countries, and actually they're planning to enter Italy and Japan this year, which, well, if we can talk about the growth in the business, but if you think about Italy, is probably they're tackling about half of the population of Italy, not all, because South is not high income, but Italy is a 16 or 80 million population country, right? So it's definitely huge. And Japan, of course, a 120 million population country. So definitely something to take an eye on.
Yeah, it's really interesting. I never knew they were entering Japan, which to me is a similar kind of market to Canada, where like you have a lot of the population in a very, very small, densely populated area like Tokyo. And it seems like the perfect place for meal kits to do well. I just wonder if there's already any established players. You said that they usually enter kind of an area where there's already some kind of established player. And you're making me jealous of the warm weather and good food in Spain. I'm sitting here in Canada and it's starting to get cold already.
Well,
but to me, it sounds like a bit of a risk to enter markets where there's already an established player, because you're already up against, someone that's done the advertising and spent the marketing dollars and already paid to acquire these customers. And you're saying, hey, look, you should try our product as well. And you have to spend a lot of marketing dollars probably to get people to try your product. Can you talk a little bit about if you think that is a risk and maybe some of the other potential risks?
Yeah, sure. No, that's a very good question. I mean, first of all, I mean, HelloFresh, what they do when they enter a country is that they don't go all in, okay, when they start the operations there. So they try to make it with the minimum capital possible, just to try the market. So when I say that they're entering Japan, it's not that they're going there and they're building a huge fulfillment center, huge distribution capabilities, etc. Right? They will just try the market. They will try to understand how is the customer preference there, because of course, Japan has nothing to do with German. It has nothing to do with the US either. So they cannot probably leverage much on the recipes. They have to understand the culture, although of course, they will go for probably the part of the population which is more international and knows about the tastes of international recipes, right? So that would probably not be a barrier or a risk for HelloFresh. But the main takeaway here is that HelloFresh does not go all in when they enter a country. They just test, in the same way that they managed to test the market with add-ons in Benelux before spreading that category and that offering to other markets. They do so when entering a country, so they don't risk too much capital. It's like, I will put that tiny bet. If it goes well, I'll dial down, right? And the other thing, if you think about it, when you were saying if there's an already established player, they have the brand, the marketing, etc., right? But one of the good and the bad things of this model is that there are no switching costs, right? And you've seen that in Canada as well. People jumping from Goodfood to HelloFresh, depending on the discount, etc. Right?
Yeah,
so it's probably not, yeah, I can imagine, right? So it's there are no switching costs. So it's actually a very intelligent decision to go to markets in which there's an already educated population that understands what's about, and you don't have to explain, invest in marketing. Look, this is something that you'll get on a weekly basis, and you can subscribe, you can cancel, you can just put it on pause, etc. Right? So I think it's something that makes sense, especially for HelloFresh, which relies a lot on their execution and the way that they understand the business, and they execute on both sides, right? As we've said. So I think it definitely makes sense, at least in my view.
It's super interesting to hear you talk about HelloFresh and the whole case, George, and specifically regarding expansion and the growth phase they're in. I think what's my takeaway is from what you're saying is, and I don't know if you agree or disagree with this, but it sounds as if that what they have really excelled at is actually being a startup and doing the startup model by country, like the model which you're explaining with. That's basically actually what they are really, really excelling at, because it's impressive, especially in this context of growth in new geographical markets, from my point of view, that, as you said, they're doing the growth rate, which is really, really high. They're doing it at double-digit gross profit margin. They are doing a break-even point, while at the same time opening up these new markets. Because you talked about leverage before being a key aspect of the Mealkit business, or groceries, online groceries. But like you said, when the most recent country is, for instance, Norway, and they start up Norway, the very first customer, that customer's contribution to the whole P&L of the whole business model, of the whole P&L, cannot be profitable, of course, at all, far from. So it's really, really impressive how they turn these countries into profitability quite fast. Must be the case, right?
No, I think you nail it. That's basically one of the things that we didn't discuss, but again, you nail it. I mean, it's amazing that these guys are opening new countries and are delivering double-digit operating margins in a business in which the other players are struggling to break even, while these guys are growing organically at more than 45%, right? So if you think about what you've said, if they're opening Norway, Sweden, now Italy, Japan in the coming months, that means that if you're growing at 45% in mature markets or less mature markets, and you're basically reporting double-digit profit margins on an overall basis, that means that probably mature markets like Germany are reporting in the high teens, even in the low 20s operating margins. So that's, and if you take a look to their guidance, they're basically saying that in the long term, this business is about 15 to 20% EBITDA margin. And consider that these guys have been very extremely, I would say, conservative with guidance, since they have, I mean, every single quarter before the results, they raise the guidance. I mean, that happens every single quarter. Actually, in the past quarter, they did it a bit late, and the market was saying, "Oh, this quarter there's no update in the guidance to the upside." So probably we have to lower our expectations, because the market is already implying that the guidance is going to be surpassed by the wide margin. So that, coupled with what you've said, right, there are probably markets that are close to 20% EBITDA margin for sure.
Wow, George. I mean, we're only like halfway into this talk, but what you basically just said within the last 2 minutes really just made me super excited about the current valuation. I think I'm starting to see this in front of me, because you're right in regards to reporting, by the way, which you touched upon. How much is it? I'm sorry, I haven't looked into all the specifics, but as far as I can see, they don't report on a per market basis. They split up the US and then international together. That's the usual reporting. Do they follow up with deeper dives on each specific market, or how does that work?
No, I mean, you can try to go onto the conference calls and try to gather a bit more information. Also, I remember the CEO of HelloFresh Canada, he said about the level of revenues that they were doing during the pandemic. So you have to kind of work yourself and try to kind of gather all this data from different points and different sources, right? They just disclose international and the US, that's the split. But there are a lot of things going on within the business model. I mean, it's not just the different markets that they're opening, but also the different products that they're opening and how they're still not doing all the cross-selling that they can do, right? So if you guys want to talk about, the acquisition they did back in 2020 of Factor 75, which is ready-to-eat meals, which I think it's definitely worth taking a look to it, because there's a lot of potential in this acquisition.
Is that the like organic kind of health-based food acquisition that they did in the US?
I'm sorry, say it again.
Was that like a healthy, organic kind of food market that they did in the US?
Yeah, that's right. So Factor 75, it's kind of a revenue, it's kind of a ready-to-eat business in which you basically subscribe to. It's similar to the model in of Mealkits, but instead of having fresh preportion food that you have to cook yourself, you just kind of receive the order, you put that in the microwave and you heat it up and it's already ready to eat, right? So in 2 minutes you can eat the full meal. And as you said, it has a bias towards more healthy fitness people, let's say, right? But they're broadening the range, so they can broader the scope of people that they go and tackle, right? But it's very interesting because this business was acquired back in 2020, right? They paid $280 million for the business. The business was growing very fast, but doing 100 million in revenues in 2020. And now this year, they're going to surpass $300 million in revenues. So it's more than 3x compared to 2020, right? For a business that they paid $280 million, so it's less than 1x sales. And the most interesting part, aside from that impressive revenue growth, is that basically they have achieved that without cross-selling. So basically they maintain HelloFresh and Factor 75 separate, right? They didn't kind of benefit from selling and cross-selling meal kits to Factor 75 customers, and they didn't do that by selling Factor 75 to Mealkit, core Mealkit customers, right? And if you think about it, it's very complementary, because one, which is the Mealkit, tackles for, or it's basically trying to solve for the dinner time, while in the case of Factor 75, it's very quick and ready to eat meal. It's tackling the lunch time, right? So it's highly complementary for people, even for people that want to have a quick dinner, right? Consider that you're a Mealkit subscriber and you said, look, I just drop out of the subscription because I realize I like the food, but I don't have time to cook. Okay, here you have one of our options, which is ready to eat. Why don't you try it? So they didn't start to do that for the time being, right? And consider that HelloFresh has more than 3 million customers, almost 4 million customers in the US. So it could be huge for them, and it could be a very very big business for them. And that's just in the US. They can now do that in the rest of the markets. And for instance, they acquired Goodfood in Australia, which is again a similar company as Factor 75. So a lot of potential in that side of the business as well. Again, moving from just pure meal kit business to to a meal solution company.
Yeah, it makes sense that these meal kit companies want to move to something that's kind of faster to prepare, pre-prepared meals or like quickly prepared meals, because I've seen Goodfood do it as well. They've started selling pre-prepared meals, and more recently they've actually started selling recipes that can be done in 10 minutes, which I really love, because one of the big complaints from people that I've seen is that some of the meals can get quite complicated and take like 30-40 minutes, and especially with having small children and stuff, it's sometimes just too much work. And this makes the value proposition for that type of customer just so much better, because they don't need to worry about complicated instructions, and they can just get something healthy, cooked and prepared very quickly. And then you were mentioning that this is a business that's kind of only operating in the US right now. In the last half-year report that they did, they said about half of their customers are in the US. I think it's like 3.8 million customers of their 7.7 million customers total worldwide. And the US seems to be growing at a much faster pace than the rest of the world still. I think customers were up like over 90% year over year, compared to the rest of the world was growing at around over 50%. So still a big clip. But I'm just wondering how you see the future case. Do you see the US continuing to grow faster than the HelloFresh Group, which is international, as they enter new markets? Or do you see things kind of leveling out, and as they enter areas like Japan and Italy, Group will one day surpass the growth of the US?
Yeah, so actually it has been the opposite, right? Because the numbers that you're seeing, that 90% growth, it has into account this acquisition of Factor 75. So basically the organic growth, it's lower, right? It's something around 50% or something around that, right? So actually, if you take a look to the number of customers in the US versus international, it was probably around 60% US, 40% international, and now it's 50-50, right? So as you start adding more and more countries, that would kind of lower the share of customers coming from the US versus international. But again, it is not only just about the number of customers, but the way you can get more share of wallet of those customers, right? We've discussed already the potential that Factor 75 has, and of course it will be easier to build that business because it's already operating and very and it's growing very fast in the US versus in the rest of the markets, right? So I think it definitely makes sense to see high organic growth in the US as well in the rest of the markets. Also, one of the things that I wanted to mention regarding the beauty of online direct to consumer business models is the fact that you have instant feedback of your customers, right? So if you go in the offline world, if you go to a grocery store, you walk there, you buy something, you eat it in your house. If you don't like it, probably you don't come anymore to that store, but the store doesn't know what happened, right? In the case of online direct-to-consumer business model like HelloFresh or Goodfood, you have feedback from the customer, right? And that makes you more intelligent and more data-driven, and you can make better decisions, right? So we were saying, like, if you're a HelloFresh customer and you drop out of the subscription and they ask you why, probably you say, look, it was very expensive, or maybe you're saying, look, you don't have time to cook, etc., right? So you can kind of try to work and solve for those problems in the business and try to delight your customers. So I think that's one of the beauties of the business model, and something that HelloFresh works on very hard.
Right. Yeah, that makes sense. That once you factor in the acquisitions, that the growth rate is about even, and eventually, like you said, they might launch Factor 75 or similar solutions in their other markets as well, which will increase the growth in those markets. And then when you say that like the number of customers is not necessarily like the most important KPI to follow, I noticed that when you look at the year over year average order value, it was actually slightly down, like 6.5% in the last quarter. I couldn't tell, because they're international, I couldn't tell if it was partially due to currency fluctuations or something, or is that something to be concerned and look out for? Would love to hear your take on that.
No, indeed. I mean, average order value is a critical operating metric, and it's for always tracking it. And you're right. It's down 6.5% year on year in the last quarter. But first, you have to consider that you have to compare on constant currency, as you said, right? So if you do the same analysis on a constant currency, which is what makes sense really, because there's not this FX component, it's down 2.6%. Okay, which it's very close to zero, but it's not ideal because it's down, right? But again, you have to consider that the last quarter was the second quarter of 2021, which was comping against Q2 2020, which was the toughest comp possible, because it was basically when every single country was on hard lockdowns, right? So I think both the FX and the fact that you're comping against the second quarter of 2020 is what makes the number a bit down. But if you consider the trend, right? So the average order value prior to the pandemic, it's very positive. I mean, it's actually quite positive, because it's around 7.2% up compared to the second quarter of 2019, right? So when we were discussing the investment case and why investors don't look at HelloFresh, it's probably because they say, look, there was a hype with meal kits within when there was the pandemic and we were all under lockdown. But then after the COVID and the lockdown gets lifted, everyone's gonna go back to the restaurants and the normal life, etc., right? But what we're seeing is that the average order value for HelloFresh is up 7.2% on a constant currency basis versus pre-pandemic. So basically, and we are now more than normalized, right, environment. So I guess it's actually a very healthy number.
Great to hear that it's trending in the right direction. And yeah, I agree. Like, everyone was on lockdown. I remember here it was cold during those lockdowns, and you had to wait in a line outside of a grocery store in the snow. Everyone was in their jackets and miserable. So that's when a lot of people turned to ordering online. So obviously, average order value is a key KPI that you're going to be tracking. Do you want to mention some other KPIs that you think are important to follow, or financial metrics that you're following?
Yeah, of course, the number of active customers is something that is critical as well. And the other is the number of orders per customer, right? The frequency, basically. So that would be on the operating side of the business, right? So again, the more frequent, the more frequency you see in the business, and the higher average order values, the better, right? Because it means that customers are getting more engaged with the service, and actually they're seeing more value in terms of add-ons and probably ready-to-eat meals, etc., right? So those are the key operating metrics. And then on the financial side, probably contribution margin, it's critical, right? So contribution margin basically being revenues minus procurement expenses less fulfillment expenses. And this is critical because it's the number that you want to track, right? The contribution margin, which is basically what gives you a sense on the lifetime value that you can extract out of your customers. And then the other is the marketing expense as percentage of revenues, which again, at the beginning, we've talked about the importance of acquiring profitable customers, not acquiring customers per se, but acquiring the right customers. And of course, marketing expenses percentage of revenues, it's definitely something important, right?
Yeah, for sure. And I think that also something that is so beneficial to the Canadian market with their marketing expenses, when you're marketing in the US, you're also hitting so many Canadian customers because Canadians are, they're watching so much entertainment from the US. Like I'll be watching YouTubers and stuff and they'll have promotions with HelloFresh. And I think that a lot of Canadians are actually consuming more US media than Canadians as we switch to streaming services, right? We're not watching as many, Canadian broadcasting anymore. So that's a huge lever that they're able to pull as well. Whereas Goodfood can't really market in the US because their customers are all in Canada.
No, that's very interesting. I mean, I didn't think about it, but it's definitely something that of course works. I mean, you can tell yourself, right? If you're watching a game or a TV show and you see that that kind of advertisement from HelloFresh, it's something that, of course, leveraging on a larger base, right? So definitely it's an advantage that HelloFresh has over other players, right?
George, coming back to something you mentioned all the way back in your introduction with your fund, you mentioned that it was quite interesting. You came across HelloFresh Group through actually going through Goodfood, which was something that a case which was presented for you. Currently, at the moment, are you invested in both Goodfood and the HelloFresh Group?
Yeah, that's right. Yeah.
In the fund. Okay. And so you like the trend overall, I assume as well. Could you elaborate a little bit about if you only had to pick one and that you were the most bullish on and the reasoning why you prefer one or the other? Could you elaborate a little bit on that or give your thoughts on that case?
Yeah, sure. So as you guys know, in the investment world, it's not only about the return, right? You have to balance it with the risk. So it's this is the ratio, right? It's a risk reward ratio that you have to weigh, not just the return. So my preference would be clearly for HelloFresh. Okay, although the return in the case of Goodfood it's way higher, multiple times higher, I would say. The risk is very, very high. Okay, because there's a lot of execution risk in the business, and
on Goodfood.
Yeah, on Goodfood. Yeah,
so the risk is higher for you on Goodfood. Yeah.
Yeah, and it's very, very high because again, there's a lot of things going on in the business. I mean, if you think about HelloFresh, you can say, okay, what if Goodfood wins the battle in Canada and takes over the market, and HelloFresh just have to live out the market because Goodfood has been very successful. They managed to do this same day delivery. They have the meal kits as well. They have the brand. It's a local brand versus HelloFresh. They have add-ons, etc. But this will probably don't change the equity story of HelloFresh much, to be honest. So basically, in the case of HelloFresh, which is the first player in those 15 countries, there's very little execution risk compared to the case of Goodfood, because if you think about the battle that or the competition that Goodfood is facing right now within the meal kit category, and the complexities around delivering online groceries in Canada and building out a completely different business, because it is true that Goodfood is using meal kits as an entry door to to offering online groceries, but the business is completely different. I mean, there's no that there's a lot more waste in the business. You don't have the benefit of having 7 days in advance to prepare all the meals. Gross margins are not as high, etc., right, because of the waste. So there's a lot of execution risk in the business. Of course, the potential is, it could be a tenfold, if you will, but the risk is very, very high. Well, in case of HelloFresh, you can double, triple, and the risk is not as high.
I think that's a really interesting way of putting it, George, through that perspective, and makes a lot of sense as well, and the way you elaborate on that. But again, like you said, you talked about the HelloFresh market, which is basically like Goodfood online groceries, and when you talk about that in relation to risk as well, how far are the HelloFresh Group going into that investment? How hard are they pushing at? I mean, Goodfood are very open about the strategic path for going online groceries, where they are today, where they will be in the short term and long term. How does the HelloFresh Group address that from the business case? What ambitions do they have in terms of transforming from a meal kit business and maybe perhaps addressing a higher TAM in the future with greater optionalities, versus having the meal kit business as a core and really excelling on that part?
Yeah, so they I mean, you said it right. Goodfood has been very clear about what their ambitions are. In the case of HelloFresh, they mentioned a couple of markets day back in December 2020 that they want to go and pursue a strategy in which probably from 500 to 2,000 SKUs in the grocery side will be the target, but they're talking about 2025. Okay, so it's not something that will happen in the next couple of years. So it's a process in which they have to discover which is the right size, how should it work, can you order groceries without meal kits? It's something that you have to order with the meal kit, because it has nothing to do, right? You know how important the average order value is, because you have to leverage not only the marketing cost but the delivery. If you're ordering something for $10 average order value, but the delivery cost is $5, it's impossible to make money out of that order, right? So it's a completely different setup. My sense is that HelloFresh has been very clear about being a meal solution company, not an online grocery business. So I guess groceries, or I mean, they don't even talk about the groceries, right? They talk about add-ons. So that gives you a hint to what they're trying to look for. Probably something that you can add to your meal kit, probably something that you can add to your ready-to-eat box. I don't know, but for the time being, they just hint that they want to add to this part of the business because they have seen that it's very profitable when you add that to the meal kit, not as a separate business.
I think that's it's a really interesting discussion and some great perspectives we are sharing here. I must admit, from an investment point of view, I completely was blindsided or missed the HelloFresh Group development, because I can basically just look at the stock development on the two and can see that obviously something was missed on my side. I still think, what about your comments on? So obviously you look at it as volatility and risk in the case of one of the businesses versus the other, but still, I mean, from an investment point of view, what seems so fascinating about Goodfood is the ambitions and the level of how the business is developing. And what I hear you say about, I think the HelloFresh Group business model seems fantastic, and obviously the metrics are showing it works really, really well. Are they ambitious enough in terms of how they are positioning themselves and establishing the business? I don't know if you'll follow me on that. If I look at like the last 18 months of execution on Goodfood, we're talking about Goodfood Wow, which is really from my perspective, I don't even live in Canada, but Adam's encounters really display it really well how ambitious that is. The level of how they develop the product and the product offering and the concept and the investment side on building an internal organization and an internal setup that is really going to hopefully harvest some of these optionalities versus the HelloFresh Group case, which seems a little bit more focused on investing in marketing and in getting that next customer. That maybe that is a little bit naive put, but I don't know if you follow me on that. Do you also see that distinction, or do you see the same level of ambition within the HelloFresh Group on developing?
Oh yeah, I got your question. I agree with you. I mean, in the case of Goodfood, it's amazing the ambition of these guys, especially the CEO. I think it's an outstanding CEO. The way he kind of understands the market and the business, it's definitely something that I appreciate, and it's definitely amazing, right? The pace at which these guys have been launching new products, right? It's something that I've never seen, right? They've managed to build up grocery business, scale up the number of SKUs from I think it was a couple of hundreds to more than 1,000, right?
Yeah.
Right now, so it's amazing because they're doing purely white label, private label products. So definitely the level of disruption that is going on in Goodfood, which is something that is good, but comes with risk. It's not something that you will see in HelloFresh, right? Not to say that HelloFresh is falling asleep, because if you think about, for instance, in Germany, it's very, very interesting to see the German case, because Germany was, as you said, the first country in which they started operations in 2011, and they just announced that they're doubling the production facilities in Germany. So for those that are concerned about the TAM and the size of the market, consider that probably the most mature market within HelloFresh is Germany, and they're more than doubling the production facilities in Germany, which are gonna be open in mid 2022. So that's one, right? The other is that they just announced that they are doubling the size of the global tech team, which is definitely something that speaks about itself, right? It's if you basically manage to attract talent and build a tech team that is double the size of that you're currently handling, you'll definitely have an advantage over potential competitors. And of course, you will improve the customer experience as a whole. So I guess those two facts, coupled with the new markets that are entering and the product expansion that is going on within the business, probably the most exciting one is ready-to-eat meals and the Factor 75 business. I think it's not at the level of Goodfood, but it's definitely above average compared to a normal business nowadays.
Yeah, that I'm definitely really interested to see what they do with that Factor 75 and if it's going to enter new markets, because I think that Goodfood and HelloFresh are both extremely ambitious and have very ambitious leaders for different reasons. With HelloFresh, it's how fast they expand. Like I said, you said that they founded the company in 2011, but I don't think they did any deliveries until 2012. And then in 2014, they were already expanding to the US, to Canada, to the UK, where they were established players, and they're willing to take on these already established companies and really, really growing at a fast rate and stealing away a lot of this market share. Like Blue Apron kind of got crushed in the US. And Goodfood is super ambitious because it seems like they don't really want to be a meal kit company. That seemed to be a niche that they used to kind of grab the initial customer and get eyes on them. And they've been able to roll out probably 1,200 SKUs in is it 2021 alone? I think that they launched Goodfood Wow in February of 2021 in Toronto. And before that, they had a small pilot program in Montreal. Mm-hmm. They've pretty much rolled out their entire grocery line while everyone is working remote. So they probably don't have everyone together in the test kitchen all at once. They don't have the branding people all in the office. They've been able to accomplish so much. And once we fully go back to normal, I'm really excited to see where this private label line is going to go. Really interesting. And as we talk about risk, we've kind of talked about the valuation for Goodfood, and it seems to trade quite cheap. It's probably roughly about 1.5 to 2 times price to sales right now. Where exactly is the valuation right now for HelloFresh, and where do you see kind of the stock price growth development in the next few years? I heard you say that it's maybe not going to 10x, but you can see it kind of being a 2x or 3x in the future.
Yeah, sure. So the way I like to think about valuations is in terms of annual return of my investment, right? So what is going to be the annual return that I get out of this investment? So basically the annual return is a function, right, of the free cash flow yield that you get, the free cash flow growth, and if possible, the multiple expansion that you get in the business. If not, the multiple contraction that you suffer, right? But in the case of HelloFresh, right, if you think about the business, this is a 40 billion euro business right now at 80 per share, more or less, and it's going to do around 6 billion euros, a bit less than 6 billion euros in 2021, right? So assuming normalized margins, free cash flow margins, right? So in the case of HelloFresh, I think it makes sense to assume, and it's probably in the lower side, it's 10% free cash flow margin. So you'll probably get to the business. It's now trading at less than 23, 24 times free cash flow, okay, 2021. So I guess it's a fair multiple to assume in the next 5 years. So let's assume that there's no multiple expansion or contraction in the business. Consider that this business, again, we've said, right, it's growing at 45%. So it's definitely growing very, very fast. So I guess my assumption here is that you're gonna earn the growth in the business. And my sense is that this business can grow for the next years, for the next 5 years at an average compounded average growth rate that could be above or close to 25% on an annualized basis, right? So if you think about it, 25% compound for 3 years, it's a double in 3 years, and it's a triple in 5 years. So, to your question, I kind of see HelloFresh going and doubling in the next 3 years, probably tripling by 2026.
It's definitely attractive then, still here. So it seems like there's still a lot of room for the share price to grow. And obviously the company is still growing at a very high rate, even as we leave like these, post-COVID comps. I kind of had like a fun question to ask, but Jacob, before I dive into that, which would probably be the last question, did you have any other questions that you wanted to ask?
I completely missed the last 5 minutes because I was just up locating my piggy bank because I need to to get some stock. No, but and then I noticed the market is closed, by the way, as of 10 minutes. No, but it's just been fascinating to hear Jorge talk about the business and us having the discussion. I think it's just made me so much wiser on both the way that Jorge is thinking about the business model, how he thinks about the HelloFresh Group, and also gave a lot of insight into understanding more about the business model.
Yeah, I'm Jorge. Thank you. You know so much about this Mealkit and online grocery business, and I feel like grocery hasn't seen much innovation, in probably people's lifetimes. So it's so cool to see these disruptors come in and offer such attractive offerings to customers. I certainly love it. I have an aunt actually who orders HelloFresh and Goodfood every single week for her family. She gets both of them, and she loves them both so much. I just have kind of a final fun question, kind of like a fantasy draft kind of thing. But HelloFresh has been quite acquisitive, in the last few years. And do you think there's ever a possibility that they would acquire Goodfood, or even maybe more fun, do you think they would ever want to acquire Blue Apron?
So, in my view, I mean, it's definitely a possibility. Okay, never say never. But to be honest, I don't see the CEO of Goodfood, living this dream out and selling out to HelloFresh, right? I believe the guy is very ambitious as we speak, and basically he wants to create a huge business out of it, and selling out to HelloFresh will be kind of like a very easy decision, right? So I don't think they're up to sell for the business. Of course, there's a price for everything, but I don't quite see it. And in the case of HelloFresh, if you think about it, it's true that they've been acquiring companies in the last year, but those companies were operating in different businesses, right? So it was ready-to-eat meal, which has nothing to do in terms of the facilities that you need to create and to produce those goods. But HelloFresh hasn't been that acquisitive in case of acquiring other companies in the meal kit space, right? The only one that I recall was Chef Plates in Canada, but they like to kind of compete head to head. So I don't think they would like to acquire Blue Apron either, right? Because when you acquire Blue Apron, you're basically acquiring the brand and the customers, and basically you can do so being more wiser at marketing spending, right? So I think it's not something that I consider as a possibility for the time being.
Yeah, that makes sense. I mean, I completely agree with Jonathan Ferrari being so competitive and having this grand vision of, this giant kind of food giant of Canada. And I think Blue Apron too, maybe you're right. Like they've kind of let a lot of customers and investors down, and it might not be a good look, and they'd probably just prefer to execute and acquire those customers, away at a low switching cost, like you said.
No, and having said that, considering the price at which Goodfood is trading right now, it will be definitely a good use of capital, even if they pay 100% premium. So,
yeah.
I will be very happy as a HelloFresh shareholder to see them, stealing Goodfood.
and a Goodfood shareholder. You kind of win twice there.
Great. Both Adam and George, thanks a lot for this discussion. As we reach the end of this talk, it's been really, really fun, George, to have you on board on Coffee and Food. So thanks a lot for taking your time to jump on board and having this chat with us.
No, thank you both, Jacob, and thanks for all the work that you guys have done on Goodfood and sharing it with all of us. It's definitely something we have to be very thankful.
Yeah, of course. It's been so fun to follow the story of both these companies with you. And if you're interested in hearing more of what George has to say, George, is it okay if we leave a link to your Twitter in the video description?
Yeah, sure.
Cool. Yeah. So we'll leave that. And if you're interested in following George, check that out. And I would think that we've learned a ton today. I'm going to have to take some time to kind of absorb all this new knowledge that I've found out, and maybe I'll end up with a HelloFresh position in the future.
Okay, thank you guys.